Let's start with the Fed. Paused rate hikes for the first time in 15 months, but Chair Powell not ruling out more rate increases before year end.
Nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy.
All right, what do you think?
Well, I think a lot of people were trying to figure out whether we're going to have a soft landing or a hard landing. But yesterday we discovered there's a third choice, which is that the plane is still in the air and doesn't have any intention of landing. So how do you have a soft or hard landing? And the reason is because of housing. And housing's controlled by wages. I think if you want to know the key to this, go to the Home Depot conference call, the full day, the analyst day, and you will hear why they have to do it. Home Depot is saying, look, this is an incredibly inflationary time. There's inflation everywhere. Housing, by the way, $13 trillion in value has been created. Home prices are up 40% since 2019. Everything trickles down from housing, and housing, we're going to hear from Lenore. Same thing. It is where the epicenter of inflation is, and it's rippling throughout the economy.
You've been saying that for quite some time. That said, there's not that much action in housing in terms of people selling and people buying as a result of interest rates. I mean, if you have a good mortgage, for example, you are less likely to want to leave and have to assume a new mortgage at a much higher rate, aren't you?
Well, okay, so there are literally 50% of people don't even have a mortgage, okay? Of the other people who have mortgages, let me guess, 40% of owner-occupied homes have no mortgage.
Yeah.
80% of those with mortgages are locked in at 5% or lower. So if you look at that, you do the algebra calculation, obviously, then there's almost no one to sell.
Right. Why I don't want to move because I can afford my monthly now, and then may not be able to afford it.
Exactly.
Right. Well, the person buying my home is not. It's just that same issue.
And you have 68 million consumers that have a lot more money than they did in 2019. That's the Bank of America consumer, just Bank of America alone. And then here's some statistics that I got that I think are really indicative of where we are. Vacant apartments are now filled in 38 days. Last year they were 32. There are 8 prospective renters for each unit, down from 11. But imagine what's going on here. These renters can't move up to new homes because there are so few new homes. We're building homes dramatically lower pace than we did last year at this time because the home builders listened to Powell and thought that maybe we were going to have a recession. And that you have what you really need are the student. This is a terrible scenario, but student loans have to come back to where you have to pay them. And people have to go back to live with their parents in order for this cycle to be broken. And I think the cycles can be very hard to break.
All right, come back to the Fed for me, though. I mean, we've got any number of different opinions out there. Morgan Stanley would continue to think the Fed is done here.
How do they say that it's based on nothing?
Based on nothing. Maybe based on nothing. But there are those who believe, well, listen, obviously they're going to be data dependent. And even though he's indicated that rates may stay where they are for another 2 years, right?
True. Now, autos, I have fresh auto information. The auto information is compiled once a month, and autos were up very big. Vehicles, and that's come down. Used cars and trucks are going to surprise you how much they've come down in the last 4 weeks. My information is fresher than their information.
Okay, so I feel like you're telling me different. You're saying, well, on the one thing, this chorus you always share about housing is so strong, and housing is strong, and housing is strong, and then you're giving me everything else that's not that strong.
Well, no, I think that's the conundrum that we're faced. Which there's really only one thing that is really strong. But look, do you really think if you're Loretta Mester from the fourth fastest growing city in the country, Cleveland, do you really think that you can have home prices up 40% since 2019 and feel that we're not in an inflationary environment? Especially with Lennar, which is being in the 10 o'clock hour. Lennar having unbelievable numbers, although some of their homes prices went down. David, I'm just pointing out that this is the metric that they're really upset about.
And Stuart Miller will join us in the 10 o'clock hour.
If you deal with Bank of America, now MasterCard, the MasterCard spending numbers, David, are incredibly fast. Now, there's a note. Citi's got a negative catalyst in Marcus Press. I don't know. All I can tell you is that MasterCard spend was off the charts, particularly for jewelry. Mother's Day was amazingly strong.
Gunlock yesterday. joined Watmer later in the day. Take a listen to what he had to say, of course. What do we used to call him? The bond king, I think, in his reaction. I want to get yours to his reaction of the Powell presser.
I don't believe the Fed's going to raise rates again. I think Jay Powell has a really difficult job right now because, as Steve is correctly pointing out, I think he realizes that we're at a turning point potentially on the inflation situation and on the economy, and yet there are people that are dedicated to these lagging indicators like employment, labor market, and certainly looking at core CPI. Well, it lags. It just does.
Okay, about 30 years ago, there was a debate. I'm sorry, 1983. There was a debate about how to make it so that the CPI didn't look that high. So they took homes out of it. I mean, I wish I were joking about this. They took homes out of it, but they kept rents in. If you put homes into the CPI is what I'm saying is they're not going by it.
Yeah.
They're not, because homes aren't in the CPI. I mean, that was sleight of hand to take homes out.
Yep. But
do you think Loretta Mester, who happens to be incredibly rigorous, is sitting here saying, you know what, let's just asterisk this? Homes, David, 66% of the people in the country, it's a very important indicator, and homes are out of control. They can't build them fast enough. Lennar can't build them fast. Toll can't. KB Homes can't. So the supply of homes is very limited. Of new, used homes, supply very limited. Rental supply very limited. And we're supposed to say that we're in a non-inflationary environment. Ted Decker, the Home Depot call was chilling. And if the Fed listened to that, they would say, we are so not done. If Gunlock would listen to the Home Depot day, you would just say, holy cow, are we in a jam?